Did Davos 2026 reveal deep fractures and fresh ambitions in the global economic order? Good morning and welcome to another power-packed episode of Business Week. This week, key takeaways from the World Economic Forum in Davos offered a snapshot of a world in transition. Former U.S. President Donald Trump claimed there was a framework of a deal on Greenland, while insisting he will not use force. Remarks that reignited debate around geopolitics and strategic influence. Former central banker Mark Carney warned that the global order is in the midst of a rupture. And France's President Emmanuel Macron also used the platform to denounce what he described as unfair U.S. competition. Now, meanwhile, European Union leaders closed the ranks around the idea of greater European independence, pushing for stronger autonomy in critical sectors. From Africa, Nigeria made its case to global investors, advancing its investment narrative amid intensifying global competition for capital. Now, throughout the show, we will be bringing you highlights of our extensive coverage of the World Economic Forum held in Davos, Switzerland. Missed these stories? Don't worry, we've got you covered. I'm Abby Owolawi. Let's dive in. Let's take a look at how the markets performed this week. We begin with a week-on-week commodities performance as at Friday, the 23rd of January. Oil prices rebounded on Friday after U.S. President Donald Trump renewed threats against Iran, raising concerns of military action that could disrupt crude supplies, while there are outages in Kazakhstan. Now, Brent crude was up by 2.04% on a weekly basis to $65.64 a barrel, while U.S. WTI crude was at $60.84 a barrel, up by 1.88% from last week. A look now at the Nigerian Stock Exchange. At the end of last weekday of trading, a total of 731.66 million shares in 44,005 deals, corresponding to a market value of 19.04 billion naira, were traded. Now, compared to Friday, January 9th, yesterday's data showed a 35.52% rise in volume and an 8.37% drop in deals. The current market capitalization of the Nigerian Stock Exchange is 105.95 trillion naira. Let's now take a look at the weekly performance across African markets. Starting in South Africa, the Johannesburg Stock Exchange closed at 122,281.31, marking a rise of 1.76% week on week from January 16, 2026. In Ghana, we saw positive movement with the index rising on a weekly basis by 1.85% and closing at 8,977.01. Now in Kenya, the Nairobi Stock Exchange closed upward by 0.38%, with the index ending at 194.60. Finally, Morocco's Massy closing there at 18,643.56, down by 2.90% on a weekly basis. A look now at European markets, where the regional Stock 600 dropped by 0.82% on a week-on-week basis from January 16th, 2026, and the German DAX index was down by 1.27%. France's CAC 40 index dropping there by 1.17%, while the UK's FTSE 100 dropped by 0.76%. We also have Spain's IBEX 35 retreating by 0.61% on a weekly basis. Finally, let's take a look at Wall Street as at Friday, January 23rd, 2026, as the Dow Jones Industrial Average trading 0.37% lower than Friday's. The S&P 500 dropping there by 0.17% on a weekly basis. We also saw the Nasdaq Composite retreating by 0.32% week on week. Let's now take you to our top stories for the week. President Donald Trump said on Wednesday that he has reached a framework of a deal on Greenland with NATO Secretary General Mark Rutte, and that he will not impose tariffs against Europe as part of an effort to acquire the Arctic territory for the United States. The announcement made on Trump's social media account was the latest twist in his effort to seize Greenland from Denmark, despite Danish and Greenlandic objections that the island is not for sale.
And they have an excellent, by the way, Secretary General who's possibly in the room. Mark, are you here? Yes, he's here. Hello, Mark. We never ask for anything. and we never got anything. We probably won't get anything unless I decide to use excessive strength and force where we would be, frankly, unstoppable. But I won't do that. Okay? Now everyone's saying, oh, good. That's probably the biggest statement I made, because people thought I would use force. I don't have to use force. I don't want to use force. I won't use force. All the United States is asking for is a place called Greenland, where we already had it as a trustee, but respectfully returned it back to Denmark not long ago after we defeated the Germans, the Japanese, the Italians, and others in World War II. We gave it back to them. We were a powerful force then, but we are a much more powerful force now after I rebuilt the military in my first term and continued to do so.
While speaking at the 2026 World Economic Forum, President Trump used his address to appraise its economic performance over the past year and also took a swipe at the European leadership. Let's take a listen.
Inflation has been defeated. Our previously open and dangerous border is closed and virtually impenetrable. And the United States is in the midst of the fastest and most dramatic economic turnaround in our country's history. Under the Biden administration, America was plagued by the nightmare of stagflation, meaning low growth and high inflation, a recipe for misery, failure, and decline. But now, after just 1 year of my policies, we are witnessing the exact opposite: virtually no inflation and extraordinarily high economic growth. Growth like, I believe you'll see very shortly, our country has never seen before, perhaps no country has ever seen before. Over the past 3 months, core inflation has been just 1.6%. Meanwhile, fourth quarter growth is projected to be 5.4%, far greater than anybody other than myself and a few others had predicted. Since the election, the stock market has set 52 all-time high records. So that's in 1 year, 52 records, adding $9 trillion in value to retirement accounts, 401ks, and people's savings. People are doing very well. They're very happy with me. Since my inauguration, we've lifted more than 1.2 million people off of food stamps, and after 4 years in which Biden secured less than $1 trillion of new investment in our country. Think of that, $1 trillion, substantially less than that. In 4 years, we've secured commitments for a record-breaking $18 trillion, and we think when the final numbers come out, they'll be closer to $20 trillion of investment. That's never been done by any country at any time, not even close. Just over 1 year ago, under the radical left Democrats, we were a dead country. Now we are the hottest country anywhere in the world. In fact, the United States economy is on pace to grow at double the rate that was projected by the IMF just last April. And with my growth and tariff policies, it should be much higher. I really believe we can be much higher than that. And this is all great news, and it's great for all nations. The USA is the economic engine on the planet, and when America booms, the entire world booms. It's been the history. When it goes bad, it goes bad. You all follow us down, and you follow us up, and we're at a point that I don't believe we've ever been. I never thought we could do it this quickly. My biggest surprise is I thought it would take more than a year, maybe like a year and 1 month. But it's happened very quickly. This afternoon, I want to discuss how we have achieved this economic miracle, how we intend to raise living standards for our citizens to levels never seen before, and perhaps how you too and the places where you come from can do much better by following what we're doing, because certain places in Europe are not even recognizable, frankly, anymore. They're not recognizable. And we can argue about it, but there's no argument. Friends come back from different places. I don't want to insult anybody, and say, I don't recognize it. And that's not in a positive way. That's in a very negative way. And I love Europe, and I want to see Europe go good. but it's not heading in the right direction.
Canada Prime Minister Mark Carney warned world leaders gathered at the World Economic Forum in Davos that we are entering a new era. Carney has warned of global fissures beyond U.S. threats to Greenland in a web speech that won him a standing ovation on Tuesday. He pointed out the U.S. power had meant that the rules-based order had been imperfect, with the enforcement of trade rules and international law applying on the basis of military and economic might.
We knew the story of the international rules-based order was partially false, that the strongest would exempt themselves when convenient, that trade rules were enforced asymmetrically. And we knew that international law applied with varying rigor depending on the identity of the accused or the victim. This fiction was useful, and American hegemony in particular helped provide public goods, open sea lanes, a stable financial system, collective security, and support for frameworks for resolving disputes. So we placed the sign in the window. We participated in the rituals, and we largely avoided calling out the gaps between rhetoric and reality. This bargain no longer works. Let me be direct. We are in the midst of a rupture, not a transition.
With the transatlantic alliance on the verge of collapse, European Commission President Ursula von der Leyen stepped onto the main stage of the World Economic Forum in Davos, Switzerland, to make the case for European independence, arguing that the power shifts shaking the global order should be treated as a catalyst for good rather than a cataclysm.
That geopolitical shocks can and must serve as an opportunity for Europe. And in my view, the seismic change we are going through today is an opportunity, in fact, a necessity, to build a new form of European independence. And this need is neither new nor a reaction to recent events. It has been a structural imperative for far longer. So when I use this term, European independence, around a year ago, I was surprised at the skeptical reactions. But less than 1 year on, there's now a real consensus around this. The sheer speed and almost unthinkable scale of the change have driven this, but the underlying imperative is still the same.
French President Emmanuel Macron on Tuesday, January 20th, announced U.S. competition seeking to subordinate Europe and unacceptable tariffs following U.S. President Donald Trump's threat to impose levies on countries opposing his plans to seize Greenland. Macron described competition for the United States of America through trade agreements that undermine export interests, demand maximum concessions, and openly aim to weaken and subordinate Europe.
And when we look at the situation, it's clearly a very concerning time, because we are killing the structure where we can fix the situation and the common challenges we have. Without collective governance, cooperation gives way to relentless competition. Competition from the United States of America through trade agreements that undermine our export interests, demand maximum concessions, and openly aim to weaken and subordinate Europe, combined with an endless accumulation of new tariffs that are fundamentally unacceptable, even more so when they are used as leverage against territorial sovereignty. And competition from China, where massive excess capacities or distortive practices threaten to overwhelm entire industrial and commercial sectors. Export control has become more dangerous new tools, destabilizing global trade and the international system. And the answer, in order to fix this issue, is more cooperation and building new approaches. And it's clearly building more economic sovereignty and strategic autonomy, especially for the Europeans, which is, for me, the core answer.
U.S. President Donald Trump threatened to impose 200% tariffs on French wine and champagne late Monday in response to Emmanuel Macron's rejection of his offer to join the Board of Peace, tasked with overseeing the next steps in Gaza. Informed by a reporter that the French president had said he wouldn't join the board because of the concerns with powers, Trump dismissed Macron as lacking influence and said he would be out of office in a few months. Now in Davos, leaders of the International Monetary Fund, European Central Bank and World Trade Organization discussed rising geopolitical risk and the impact on global economic growth and financial stability. The discussion took place during the Global Economic Outlook session on the forum's closing day, where policymakers and business leaders explored how governments and businesses are adapting to an increasingly fragmented global environment. Let's have a look.
From an economic and from a business point of view, we depend on each other. We have these very strong links and bind. Suppliers sometimes are in a position of strength. Demanders, if I look at supply and demands, have also a position of strength. And I think that all directions have to be explored, and my takeaway personally as a central bank president is that we have accountability to the truth. You know, my economist often says, try to distinguish the signal from the noise. Well, I think we've had a lot of noise this week, and it's been a tremendously interesting and fascinating week from all perspectives.
When we talk about prosperity, we also have to be mindful that there are countries in the world where conditions are bad and worsening. We just presented our global economic outlook. We upgraded the United States, the Eurozone, China, India, but we have also seen countries that are either affected by conflicts or have really terrible macro conditions getting worse off. And the point I want to bring to all of our attention here is now we have artificial intelligence that is going to put on steroids transformation, and it would also put this risk of the accordion of opportunities opening in favor of some, but not of others.
I know everybody thinks multilateralism is dead and we're all on our own, but there are certain problems we just cannot solve in this world alone. And no one country or even one region can be responsible for regulating or putting the guardrails on AI. So should we not be looking to global cooperation on this issue, even though that's becoming a little bit of a dirty word? But before I hand over to you, I do want to say one thing. I'm almost afraid to say it. From the trade perspective, the work we've done shows that AI could be very beneficial. Yes.
Larry Fink, Chair and CEO of BlackRock, the largest asset manager in the world, says everyone should be investing in their home markets. Now, his comments came during a fireside chat with Elon Musk, who Fink praised for earning a compounded return of 43% since taking Tesla public.
All we want is peace.
Okay, I want to, as I said, I'm a pretty proud CEO of BlackRock since we went public. The compounding return of BlackRock to our shareholders was 21%. Since Elon took Tesla public, his compounded return is 43%. This is just another advertisement for everybody, especially for Europeans. This is why more citizens should be investing with growth, investing with their countries. Imagine if a lot of pension funds invested with Elon when Tesla went public, and how much return would all the pension funds that invested side by side with Elon and the growth. So a spectacular return. There's very few companies. Well, I don't think there's any other company as large as Tesla today that has that compounded return, so congratulations.
Thank you.
It's a good measurement.
Well, we have an incredible team at Tesla, and that's the reason.
Now, in the same fireside chat, Elon Musk predicted that robots will eventually outnumber humans.
Yeah, I mean, the way to think of it is that if you have a large number of humanoid robots, the economic output is the average productivity per robot times the number of robots.
Right.
And actually, my prediction is in the benign scenario of the future that the robots will actually make so many robots and AI that they will actually saturate all human needs. Meaning you won't be able to even think of something to ask the robot for at a certain point. There will be such an abundance of goods and services because my prediction is there'll be more robots than people.
Well, that's it for our top stories.